just switching to another network because it's saying my connection is unstable. So.
Good morning and very warm welcome to our PAY360 virtual event this year. I'm Lana Abdullayeva. I'm Strategic Advisor on Digital Financial Services Strategy and independent speaker. Majority of my career I spent in banking and financial services, working with bravest brains and well-known global brands, as well as building and scaling new businesses. As a scientist by education, I am always been driven by curiosity and passion for new inventions. And the space of financial services and digital financial services fascinates me today on creation of new products, new services for the benefit of end customers, as well as reshaping the business models and economic and governance models of banking and FS globally. I am a passionate extrovert and team player and enjoy working collaboratively with industry pioneers and veterans and economic regulators, shaping external policies for the benefit of markets, of economic development, of general evolution and end user benefits as well. Today, I am absolutely thrilled and excited to invite and welcome you to panel all-star panel discussion, Winning the Digital Transformation. I am joined by my friends and peers in experienced veterans and experienced industry players, as well as bravest brains and inventors and serial entrepreneurs, to lead the discussion on what we can learn from the past and what we can take to our brighter future to solve all problems with the new tools and new solutions and create better ideas for next generation. So without further ado, if I could ask my peers and friends to introduce themselves. Simon.
Yeah, good morning, everyone. That's quite an introduction. Good morning. I'm Simon Eacott, and I am the head of payments product development and innovation at NatWest. And in that role, I've got responsibility for the payments innovation agenda, but also equally as important with our relationship for developing the industry bodies as well. I've got a long-standing involvement in the payments industry, and that's been through undertaking a number of different roles, both internally and externally, over a good number of years. I currently sit on the Payments Advisory Council, which supports the Pay.UK board in developing their strategic agenda, and also the CHAPS Strategic Advisory Forum that does a similar role for the Bank of England in terms of CHAPS and the real-time gross settlement systems. I'm absolutely delighted to be here today, as I believe at the moment we are right at the middle of an exciting time for the payments industry. Never been a better time to be in payments. I certainly share Lana's passion for creativity in that respect, and I believe that the industry has a great opportunity to change at pace for the good of not just the end customer, but also the UK PLC. So that's me. Thank
you, Simon. Nigel, if I may invite you for the next round of introduction, please.
Sure. My name is Nigel Verdon. 3 times serial fintech entrepreneur. I founded a business called Evolution in 1996, which is now part of FTSE 100 company BAE Systems. In 2007, I founded Currency Cloud, which is an international payments and foreign exchange business, part owned by Google and Visa. The latest business I founded is RailsBank, where we're principal members of UK Faster Payments, of BACS, CP members of SWIFT. Visa's an investor in us, and also we're principal members of Visa and MasterCard. So payments is one of the core technologies and core processes that we operate. So thank you for the invitation to this panel.
Thank you, Nigel. Sean, may I go to you next, please?
Sure. Thank you, Lana, and hello, everyone. So I'm Sean Puckrin. I'm the Chief Products Officer of GPS. So for those of you who don't know what GPS is or does, we're an issuer processor that supports a number of the new startups and challenger banks and lots of other companies to issue cards in the UK. So RailsBank is a customer of ours and a very welcome partner as well. So my background, I've had a pretty varied career in various things to do payments, but the first half of my career was all mobile. So I worked for a company called Symbian, and if any of you remember that back in the day, operating system for smartphones. And I worked with the likes of Nokia and Samsung to make mobile devices. Kind of the second half of my career has been mostly payments. So I initially started at Monetize, where I ran product there and built a lot of the UK's first sort of mobile banking apps, including NatWest, RBS's mobile banking app. And then spent about 5 years at WellPay in various roles, but particularly in the UK business, and then a consumer-facing startup in a state agency called Nested that was invested in by a number of the UK VCs, and then sort of more latterly in this role. What all that experience has kind of given me is that it all comes down to the customer, understanding the customer needs, and I think to echo what Simon says, now is the particularly exciting time in payments, and really a great opportunity to really change what customers get at the end of the day and help solve their needs and give them better services.
Thank you, sir. Adisa?
Hi, I'm Adisa Tajani, and I look at digital innovation and partnerships for HSBC UK. My background is, I think, quite varied. I've done big tech and small tech type of projects. So before joining HSBC, I was at a venture-backed startup, open banking startup from California, and looked after their marketing across EMEA. And then before that, I was at a very familiar fintech hub called Level 39, and worked with a number of different players across the industry, from banks to VCs, to actually rolling out the payment system that we used at Level 39, which was a fact that a lot of people just don't really know that I did. And before that, I was actually in EdTech. So I was at an EdTech startup called Apps for Good. So, and actually we did a lot of work in mobile, making mobile partnerships. So the likes of Dell and BlackBerry were players that we worked with. It sounds a bit strange now, but it shows how fast the industry has changed in the last 10 years. So look forward to an interesting discussion.
That's fascinating. I think that's very important to remember the history and where we were and how we actually got through it, as well as what we learned from it. Some wins and success, as well as some perhaps lessons that we could have changed as we are moving forward. I am a big advocate of lifelong learning and learning about the history to take to the future, to a brighter future. And if we look backwards over the centuries, humankind creativity, we're inventing solutions to expand reach to a bigger space. And some of the instances were more successful than the others. But there are some tools and mechanisms that usually bring opportunity to shift business models and economic models, exploring new territories, navigating different trajectories, perhaps. And some I will take us back as 1600s, when building concept of trust in the financial services actually led to what we know credit and public debt inventions. As well as the 1800s, where a railroad was invented, first in Britain and then later in America's transcontinental rail lines. In 1900, we created planes as a humankind, and then explored space. And then later on, a small thing as internet was created, which is leading to further developments as cloud computing, and now we're looking on exploration of that space. So Gartner predicts that 80% of heritage financial services will be relevant by 2030. Is that true? Is that opportunity or is that threat? What can we take from that very distant past and our ancestors to the brighter future for our kids and next generation? Nigel, would you like to give us your considerations as a bravest entrepreneur of the past and in the future?
Thank you. I actually tend to agree with the Gartner report on that, because if you look at the fundamental cost-income ratios of most banks, and post-COVID, interest rates are going to be negative or sort of near zero or negative. So there's a massive the cost base that sits behind most of banks and payment systems is going to massively struggle. And so I think the bank industry as itself has to move on and understand how can the economics change in industry, and that means changing the roles of banks and the fintech world from distribution and origination. Just an example, for a G10 bank, the customer acquisition cost is about $350, and for the lifetime value of a non-lending customer is about $250. So the basically your cost, every deposit you acquire, because generally the banks don't really care about the end customer, they really care about the deposit coming in, or the opportunity to upsell that into a loan is negative. If you look at different distribution models where the banks still maintain deposits and lending, where they're absolutely excellent at, and they're places of safety for money, and you partner with, say, the fintech world of people through people like RailsBank, you start being able to originate deposits at $10 a deposit instead of 350, and that becomes profitable on that. And same with loans. For smaller loans, it's very, very difficult, especially in the SME market, and HSBC pretty much backed out of all the cross-border SME market because of this. But if you can then start originating loans as well at $10 a loan, as well as the deposits, you start making an ecosystem that works for the customer. And as you started very early on, this is all about the customer, that's a consumer or an SME. So I think Gartner has a lot of foresight in there, and the background behind that article, I believe, was the economics and looking at the broken economics of banking. And if we can fix that economics, we can create a world which is much, much, much better and more focused on the customer, and works for the banks and works for the fintech world. And I think that's a challenge we all have over the next 10 years.
That's a very good consideration. Thank you, Nigel. It's a quick round table of anything to add. I'll start, Sean.
Yeah, the risk of a boring panel, I massively agree with what Nigel said. The fundamental economics kind of are changing and will change, you know, whether that's through the way that we serve the customers, through the channels that we adopt, through the, you know, where we host the technology, all of that kind of stuff. And so, you know, that has to change. And you know, if you kind of look at the economics of acquisition, you just take acquisition exactly as Nigel says. One, we can reduce those costs through, you know, the unbundling of the services that go into that. So KYC, we're now seeing, you know, 4 or 5, 6, you know, really great, you know, KYC providers that, you know, I don't have to build all that myself, right? And they work across the world, you know, they're enhancing their technology. I can work with various cloud providers like RailsBank for my core banking. I can work with GPS for my processing. So I can start to really kind of unbundle the back end of my services, which allows me to do it at a much lower cost. Now, there are also, you know, challenges that come with that, but, you know, the ability to build out, you know, sophisticated banking services no longer requires the massive investment and cost structure that used to be required. And then if you look at on the kind of actual acquisition side, who's well positioned to acquire customers? Well, you know, it may be banks today who have brands that people trust, and that's great, they can leverage that. But we'll see a whole range of other sort of brands that people do trust, and they can drive, you know, cost of acquisition down even further because they have great brands, they have great channels already. So that unbundling and rebundling of all of the parts of this sort of finance stack is going to lead to lots of different ways of coming to market and different propositions as a result.
And that's a great point. I would like to come back to it a little bit more details on that, but just to make sure that if on our learnings from ancestors, if we have anything to add, Adisa?
I think that we're all highly aware of the different market dynamics that are currently at play, and I think that across the sector, we know that different things are changing, and we have looked to partner with stakeholders like AWS and Google in order to help drive some of that partnership agenda that we've been discussing. And I think that in the broader term way, I think if you look back at history, some of the first code-breaking machines were bought by large institutions like banks. And I think that someone's probably going to try and correct me on my history, but the ability to buy technology is there, but then to leverage the technology to make products that serve our customers is the most important thing, and everyone's on a different journey in doing that, and that's why we do look to work with and partner with others. But I also think that we need to make sure that we manage risk and security in the right way to make sure that we are the custodians of our customers' money, and that's the most important thing.
Yeah, so risk and security is an important point, but I will drill a little bit more on the technology aspect and use of technology by financial services players. A few decades ago, my first degree, as I mentioned, as a scientist, my master's project was developing online yellow pages for the first ever digital telecom in Azerbaijan. Fascinating piece, and we were not talking about cloud computing or APIs or anything of modern tech at the time. We were using the small thing called database, and that was as effective as it could be. But what UK continued to be pioneer on a number of things, from the first invention of the commercial railroad in 1830 something, if memory is correct, to later on in payments and financial services. We were the first industry over a decade ago to create faster payment. We're not happy about it anymore. We think we need to do better, and we are working on new payment architecture. We are the first that launched open banking with a bit of help of regulators and pushing. So Simon, some of those projects we actually done together, and I'm still thrilled on the collaboration that industry achieved through Payment Strategy Forum and few other things. But over the past couple of decades, if I look on UK journey, it was a combination of industry professionals and personal relationship and drive for the better world, as well as a bit of a kind of push and support, some strong sponsorship from the regulators. And where's the balance? What can we learn? Could have we launched open banking not as a mandatory tick box exercise that OBIEN guys were in the back of us to drive it forward, and confirmation of PE. We're talking about it for 10 years. We haven't done it until PSR really mandated us to do it. Could what is the magic balance of two? What's your views? Can you share with us, please?
Yeah, of course. And I wish I had the magic balance. And that's a good articulation of the last couple of decades. And it's certainly been a decade of change, that's for sure. And I've enjoyed working on a lot of those developments. I think it's fair to say the UK generally has prided itself in the past for being at the forefront of developments in financial services. You've outlined a few of those, but payments in particular. But arguably, we're now at a point of inflection where we need to really harness a lot of that if we're not in danger of falling a little bit behind what's going on in the wider world. I think the current environment has also brought that into really sharp focus. It's meant that we've all had to focus really, really hard on the importance of customers, serving customers through this difficult period, and that's enabled us to look very, very forensically at some of our investment priorities as we go forward. As you say, faster payments 12 years ago, it was launched, it was heralded as pretty much being the first real-time 24/7 payment system, and has grown exponentially from there, and has provided a little bit of a backbone for the infrastructure as it is today. But arguably, some of the functionality developed then is starting to fall a little bit behind what has happened in other areas, and you've only got to look at India, Australia, the Nordics for examples of that. So as an industry, we absolutely have to respond, and the new payments architecture is one part of that. But I firmly believe that we are pioneers in open banking. I think the infrastructure is in place. You say we were sort of beaten into it. I don't necessarily agree with that. I think we've recognised the benefits from it, embraced it. The capability and reach is there, and we've got what is I believe, a very strong ecosystem in the UK, and capability is being extended. And that, together with existing faster payment rails, notwithstanding what we do in the future, is going to give us the opportunity to generate new propositions. And you talked about confirmation of payee. That's the first real proper overlay service. You're starting to see things like request to pay emerge, and there will be a lot of others. If you then overlay that with what's coming down the pipe in terms of data is key to everything, not just today, but in the future as ISO 20022 comes along. Enriched data, more structured, gives us the ability to be much more interoperable. Then you start to see some of those opportunities. If I look at our own organisation, I think we've achieved a lot in the recent past, both on our own developments and, more importantly, working with partners. And that's a theme which we've already addressed a little bit, and I'm sure will come up a lot throughout the rest of the development. And just mention a couple of examples in our own shop. We've recently launched a thing called Pay It, a new payments proposition, which is built on that open banking infrastructure, enables consumers to pay merchants safely, securely, utilising API connectivity, generating near real-time payments, reducing friction and abandonment. And secondly, if you look at Metal, which is our SME app-based solution that gives a forward-looking view of finances and ties in very much with our accountancy proposition, Free Agent. But if you wrap it up at an industry level, I said earlier, this is potentially an inflection point. We've got a lot of developments over the next 3 to 5 years on some of the central infrastructures being regenerated. We've got the impact of the current COVID on our investment profile, and an increasing profile from the regulators on consumer and end user outcomes. And the ecosystem is getting ever more complex, ever more players in there, which is great. But we've got to get the right balance between collaboration, partnership, and competition, and that's important when we look at things like fraud as well. So, in summary, I think we've got the opportunity to build on what we've got today. We've got a real chance to leapfrog in the UK what's going on in the broader world, but also, as importantly, integrate with it. So the opportunities are there to develop a great payments capability. I firmly believe that.
So a few interesting points, right? So the complexity of ecosystems, the investment power, and also the impact of COVID, not only on the investment power, but also on the customer behaviors and some of the services and availability of that services. But if before we go to that part, I really want to drill a little bit further on UK versus the rest of the world. And Nigel, if I may invite you to comment with your international experience across the world, what actually we could learn from others, or what we could add from UK to others' melting pot.
Sure, I just think the world has a lot to learn from the UK, from Charlotte Hogg, open up the payment system. and also broke open access and open up just generally the market, because they never wanted to have a gun held to their head ever again by a single bank in the UK, as they were with RBS. That led the way to open banking, and that was the agenda in the Treasury at that time. Other countries now are learning from that, and there have been some implementation challenges in the UK, because UK was first to market with this, and that's a brave statement of the UK. And I say that I'm not an Englishman, I'm an Irishman, and I'm giving credit to the UK on something, which is my family's probably sort of like if they heard this, they would be concerned. But more seriously, there is some amazing stuff that's happened. Say in India, the Indian payment stack is a phenomenal. It's got the whole KYC right the way through to the payments, identity, sorry, rather than the KYC. And so that is something that perhaps we should learn from in the UK. And this whole identity card fracas that went on a few years ago, the fact we got identity all the way through to payment is a phenomenal, especially the speed that they rolled it out. China is at massive forefront of AI-based. And while people have been thinking that the Amazon shop, so you walk in and you walk out and you've paid, is a wow thing, it's almost like de rigueur in China. And the observation there was, because retail banking didn't really exist, people like WeChat and all the tech companies just leapfrogged when everything opened up. They've been able to take a massive technology leap within their payments and other infrastructure to enable that type of thing. And there's massive investments as well. And there's a huge market, so that's helped domestic market. So as China, India, would be great places to learn from for the next part for the UK. I think the challenge from the UK is getting the next payment architecture, and everything's been talked about a lot, but needs to be delivered now. Finally, and I think that's going to be a challenge from the UK, and get rid of some of the legacy of the backs and chaps and everything. You just need one payment system, and just from observers, you can see historically why why there's been multiple payment systems emerging, because they are different use cases, but there doesn't really need to be one for all these different use cases. It can be done with one. So I'd really say for international side, also same day, or sorry, not same day, real-time payments is pretty much also becoming de rigueur. But they're suffering from the same challenges the UK has in real-time payments, which is massive amounts of push payment fraud and other social manipulation fraud that ends up in push payment fraud and things. And the confirmation of pay is one step towards it, and others. But I think we've got to look how take a lead again in the UK on how to solve it, because other countries haven't solved that particularly well as yet. So I wouldn't beat UK up too much, because I think, but I just put the pace up a bit more, up the pace, because once we're past Brexit, there needs to be a good reason to come to UK PLC and be world leaders at things, because even SEPA Instance now here and pretty much being rolled out in most countries. So that's and just remember, taking a step back, UK and Scotland is full of people who have invented things. That CD player was invented, but is commercialized elsewhere. Let's carry on that innovation within the UK, and let's see the rest of the world benefit from that, and hopefully UK PLC will as well post Brexit.
Great, thank you. That's a very interesting concept of fraud and financial crime prevention case especially. And I would like to come back to it a bit later as we explore the ecosystem complexity. But let's just give a bit more attention to customer, right? So traditionally banks and financial services are really organized around their own structures and products. Right, so the expectations of traditional payments and banking world is customer to come and select one of the or two of the available products to match the expectations. with the technology and digital space evolving, we also see other industries approaching it slightly different. Some of fintech actually cracks that challenge as well. But if we look on the e-commerce and other sectors, they really organize around the customer, solving customer needs rather than customer solving their own needs with available products. We also see, as life expectancy are growing and increasing, the customer cohorts and their preferences becoming increasingly diverse. So therefore, there's no one box fit all. The expectations are different of, say, myself, my parents, and my kids are all sort of three different generations, different preferences and different habits. And corporate brands like e-commerce, emerging tech, and digital services, they are extremely good at it. They mastered the customer segmentation challenge. They understand customer behaviors. They target diverse cohorts, meeting individual and relevant expectations of that cohort. They tend to proactively bring solutions to the customer rather than expect customer come to them. And I think a lot of it we already mentioned today is about data, how we handle data, how we understand data, how we leverage data. Sean, I really would like to invite you to comment on some of the opportunities and perhaps challenges we facing in financial services and banking and payments, what we can learn from other industry sectors. How can we collaborate? I still believe in power of collaboration rather than competition. But over to you, Sean.
Yeah, thanks. I mean, a huge question. I think, if I try and tie it back to kind of the discussion we were just having, I think, open banking, I'm still like long-term really bullish about open banking, but I think it's a great example of something that we build it and then don't quite know what the user experience is or the user proposition is that kind of sits on the end of it. So we kind of highlight account aggregation, we kind of talk about payments, that kind of stuff. But if we ask customers what they wanted, they wouldn't talk about any of this stuff, right? So I still think it's massively important infrastructure, but I think one of its really sort of interesting challenges now is what problems does it solve in the UX that then sits on top of that. If I try and actually do an open banking payment, it's still pretty hard work, right? And so, what are the problems that we're solving for our customers? And those are all kind of still pretty fundamental. People want their money looked after. They want to get loans and credit to finance things they're doing in their lives or as part of their small business, and they want that done in a secure way, right? So those are still the fundamentals that we have to provide to people. I think what we've already seen in the last 10 years is that massive unbundling of services. So, 10, 20 years ago, I probably would have got my credit card, my pension, my investments, all from one institution. Now, there's still different parts of society, but I think most people now probably work with someone for their investments, pensions with lots of different companies, and we've got to that will continue, right? So sort of in the last 5 years, we've seen that massively happen with FX. I now probably have, I probably have a Revolut card or one of the other, amazing FX providers out there. And the reason that this is happening is that those companies have been able to look at those individual propositions and create better products. And so those better products are better for a number of reasons. They're better because they're better service. They're better because they're commercially, better off because they decided that they can make a model out of those types of businesses without taking as much money out of it and pass that savings on to the customers. They've solved kind of KYC issues, or they've solved onboarding issues, and they've built brands around those things that really speak to their particular customer segment. And as you say, that then can get more personalized over time. So they can talk about different age brackets, can talk about different businesses, that kind of stuff. And then you sort of see, as you go back to that rebundling piece, right? So you can put all those things back together in a way that makes sense for, let's say, much more constrained verticals. So I think particularly in the SME space, we've seen this hugely with the likes of Sordo and Anna and those guys. They really packaged up a set of services that include payments, but also include accountancy and all those kind of things into something that makes sense for small businesses. And so, small businesses don't care about payments, they care about running their businesses. And so, if you can build brands and services that speak to that, then you can, then payments comes as part of that journey, or finance comes as part of that journey. And I think, it's really, as you rightly said at the top, it's focusing on those segments, understanding the needs of those segments, and then providing them solutions that meet those needs. That sounds really easy, but actually, as a set of companies that work for FIs and NFIs, we've actually been really pretty bad at doing that, and we often make a product and then work out what the pitch is later. And that's easy to say, and it's really hard to change that culture and really get into that mode of understanding incrementally how we do that. And financial services has reasons why that's difficult, because we have all the regulation, we have all the security, we have all these things. They're all there for good reason. But the reason the challenger banks and others have really kind of stole the march on this is they started with the customer first and then work backwards, not with these are the systems I have or these are the products I have, and then work forwards. So if we can kind of keep that mindset, and a lot of the companies here are building technologies that allow banks and FIs to think like that, then hopefully we can sort of move forward and give customers better services.
As data expert, I'm actually fascinated that we're not leveraging the whole data aspect that we are sitting on in financial services, partly because we in traditional space are not necessarily organized to that, partly because we don't have the type of skill set and talent and to look into that, not just from individual perspective, from core discipline perspective, right? But do we really have to, like as a consumer, do I really care about the payments as a product? Quite frankly, I don't. Even as a payment gig, I don't, right? So the payment is a last step in the journey to actually serve my needs. Get fun, book my travel, buy seat ticket, whatever it is. And do we really have to, in whole payments industry, especially where we are with COVID, with the limited investment power and the economic crisis around the world, do we really have to invent it all ourselves? Is there an opportunity to collaborate? Is API connectivity gives us a chance to open the boundaries of traditional financial services ecosystem to new players? Nigel, I see you have a point to add, so I invite you to the...
Just following on from the comments earlier on, is if it's all about the customer, and where banks have traditionally all come as basic product manufacturers and have a very product-centric mindset, because the P&L, the organizations and everything behind the scenes are all organized that way, and for good reason, or just because of history. So it's very difficult to deconstruct that. I think when you're putting data together, and one of the most important things is the customer experience of doing something. Payment just happens to be one part of it. And if we very much come from an experience perspective, which like the guys from TransferWise did, I remember when they were a PowerPoint deck, having to explain to them what FX was they had this real vision of what the experience should be, and they didn't really care about the FX or the payment underneath. And so if you take that to another level, especially these stores like Amazon has and others where you walk in, the customer experience is exceptional. The customer experience means going on great goods on the displayed on the shelves, ability to take what you need and you want and walk out, and there happens to be a payment in the background. And if you then take it from a product-centric perspective, and it's all about the payment, it's not. It's about the customer experience and building amazing customer experiences. And there's a great, I think, the way that Facebook guys were looking at Calibra and Libra in a few years, 6 months or so ago. And they very much were talking about the experience. It wasn't about the payment. It was about, I can do great, as you said, I can buy my holiday. And I shouldn't have to worry about where's my card, have I got enough credit, all that type of thing. It should be experienced frictionless and easy as possible. And behind the scenes, we do all the risk management and everything, put more data on it and enhance the data payload to financial crime and all that thing. But it's very industry stuff as opposed to what the customer should have, which is an amazing experience payments just happen to be part of it. And that's just generally across all financial services, is everybody starts flogging people insurance and others when we had the bank assure sort of trend 15, 20 years ago. Rather than just thinking, okay, like the Fedor guys involved in sort of social media, involved banking in the social life of the individual, and they're really innovative. And Matthias Kroner and his team were just looking at, okay, what's call it? You happen to be you happen to be married. It's probably a good time now, or having children. It's probably a good time to get some life insurance because it's the right time to submit to propose an offer to somebody, because it's that's about them, their life, and what they've done. They've got that from social media, but they haven't tried to make it a financial experience. They're trying to make it a life experience. So I think the challenge and the real winners will be everybody makes an experience.
That's a very good point. Very, I think, timely on. To make it happen, right? There are different strengths and weaknesses in the ecosystem and a wider ecosystem. And to make it happen, we need to invite new players to traditional financial services. How we get this new, wider, more complex ecosystem right? Adisa, you started that discussion, so if I let you to continue leading on that, there are a few opportunities that we discussed for the benefit of the customer and for the economics, but there is also some challenges. I let you to continue.
Yeah, so I think that it is really important to remember that we are existing in a complex environment, and to enable us to deliver what we need to our customers, and to think in a more product-centric way, but to also make sure that we maintain that custodian way of thinking. It is a really fine balance, and I think that it's important to sort of signpost to areas where that is happening. So I mentioned that that we have signed partnerships with the likes of AWS and Google cloud services teams, and all of those types of partnerships will enable us to do more, to enable our customers to do what they need to do to have better products and services. And so I think that matching the learnings that we can from different partners, but then also making sure that we maintain our core is really important. I think an example of that is the Apple Business Chat that we just recently rolled out, which was great for our customers. And it's important that we also help our customers step through certain elements. But you're right, customers they come to us to do certain things, and they want to do them in a way that adds benefit to their lives, and making sure that organization complexity is reduced in order to help deliver products in a fast and safe, secure and regulated way is important. But the ability to be agile in that sense is important. And I think that balance can be tricky sometimes. But with that, as we're all experiencing right now, we've all had to adapt and change to make sure that we are able to continue delivering our services. And it has meant that there has had to be elements of cultural shifts, and within a very large organization like our own, it is important to realize that you need to enable and help your colleagues as much as you're helping customers as well. I think that's really important, because there's that. So I would say that my role has a mix of intrapreneurship as well as entrepreneurship, but I have the skill sets of doing that within different companies. And so I think that in order to create the best products that serve our customers, we need to channel that different way of thinking, but also make sure that we don't sacrifice the controls that we have, which keeps our customers' money safe and that does the things that we need to do every day for our customers. And I know that there's a need to have a blend, but there are different pockets within different parts of big financial organizations that are driving that agenda. And that's something that people aren't necessarily always aware of, because we're doing it at such a scale in so many different areas that it can be a bit of a challenge to discuss sometimes, but we are getting there. But we know that we are going to need to move at a quicker pace going forward.
That's great, thank you. So embracing new technology partners and building new talent is very important. So it sounds like a mix of regulation, modern tech, and open data are forcing and expanding boundaries of traditional financial services to more customer-centric brand, to customer-centric approach. It requires a new talent, it requires new partnerships, new service providers, new tech, and new general approaches, combination of complexity and agility with in the ecosystem, as well as internally in large organizations, are something that everybody is working through. So the more democratized access to financial systems today brings an opportunity for the different type of more non-financial customer-centric brands to enter the banking and payments world and brings the services, as we discussed, for the benefit of the end-to-end customer journey for customer experience. And the creation of essentially Lego playground gives us opportunity of mixing different building blocks to create those new solutions to the old problems for the benefit of the customer. But it creates a new ecosystem. It introduces opportunities to create that new solutions, and it introduces new risks that we weren't aware before. I am passionate about collaboration, and I think collaboration is important mix to move on a journey together. Some of the things that we discussed that sounded very core for all of us is fraud and financial crime prevention and security of that new ecosystem. Is an opportunity. So today, most of organizations are solving fraud and financial crime and KYC and compliance challenge individually. And it's almost becoming commercial or cost to the individual organizations. In the end-to-end payment journey, we are repeating a number of steps which adds at the end of the day to customer friction or the cost of that payment journey to the end customer. It's an opportunity for us to collaborate and figure out a way of utility approach to things like fraud prevention and financial crime prevention. There are solutions that some of the cooperative organizations are trying to drive, SWIFT, for example, on their KYC register. There are a number of initiatives on the economic regulator and industry level to harmonize some of that standards or harmonize expectations and utilize new technology in that. But we all we are planning, we are thinking, we may be incubating. We're still not executing. What is stopping us to do that? I think that's probably where I would like to finish our conversation. So I will invite a round table on what is the secret ingredient if you had just one more thing to do for the benefit of the ecosystem protection, for the benefit of the customer protection. What would you do for that? Simon?
That's a big question. I think you make a great point in terms of fraud, financial crime, and everything else. how much of that should be in the collaborative and do it once, do it well, do it safely, do it secure space. And I think we are definitely in need of more of that. We're all collectively spending a lot of money on defeating the fraudsters, and at the end of the day, that should not be a competitive space at all. We should be uniting. We should be making sure that we've got the right security in place, because our customers rely on us to keep their money safe and secure. They rely on us to know who we're sending payments to, but they're relying on us to make sure that they don't get done by the fraudsters that Nigel referred to earlier. So I would absolutely say there is space for that. We need to be really clear on what is competition, and clearly that's an important element of this. And the ecosystem has, over the last few years has really mushroomed, and that's a great thing because it has driven a lot of innovation, a lot of creative ideas, and good things that have improved the customer experience. But in a networked industry, in a networked business, you're only as strong as your weakest link, and we do see that from time to time as well. So appropriate collaboration, single use of great security ideas, collaboration on fraud, absolutely all in favour of that.
Thank you, Simon. Sean?
Yeah, here's a really big question, but the one that's most fundamental to the payments industry. Identity and fraud go a long way. I think I wouldn't want to move down a path where we couldn't allow for the innovation in the space. So for me, it's about setting standards and about how we agree to share data and identity, and then allow that kind of sort of level playing field for innovators to sit on top. I want the newest machine learning model to work on the data to be able to combat fraud in a new way, and that's only going to happen if those companies can get reward for building a better mousetrap, right? So we've got to kind of, it's a difficult problem to work out how we kind of offer all this stuff at a level playing field while still allowing a revenue stream to be built on top of that to inspire the innovation required. I think payments always comes down to identity. I still think there's been great strides in sort of open banking, but I still think both nationally and internationally, how we establish and share identity is kind of key. That will be different around the world depending on exactly how things go, and we've sort of seen Nigel talk about the various different things that are happening in different countries. But the more we can build something that allows us to share customers' identities and give them control of the identity and who they're giving that identity to, that's at the core of all of this. And now we've seen distributed methods in crypto. We've seen national methods. We're still fumbling our way around in this area. And I think that for me would be the area where if we can establish commonality there, then everything else is a little bit easier. The KYC, yes, there's lots of really interesting companies sort of getting out there, but at the end of the day, they all basically look up lists of data that they have access to kind of work out whether people are who they say they are, right? There are better ways to do this, but they require collaboration, and we haven't been able to kind of really sort of crack that nut as yet.
Thank you, Sean. Adisa?
So I think that the cultural aspects are going to become more and more important in order for us to be able to deliver all of the change that we want to, and to also leverage the standards that we want to set. I think that Sean's point about open banking is an interesting one, because I jumped and joined an open banking startup because I believed in the change of open banking. And I think that it is important to make sure that we take lessons from other jurisdictions, but we still make sure that we build innovations and products that are strong in the UK market, but have that level of interoperability, which was fundamentally what the beginnings of the open banking and data piece of work was, when I think the chancellor at the time wrote the first paper which set all of this stuff off. I think that it is going to become challenging, but it's challenging in a way that we can all rise to, and that we are rising to. And I go back to the point of not compromising on fraud and security, because ultimately we need to keep our customers' money safe, and we need to make sure that whoever we partner with understands why we think in that way. So I think that going back to the cloud examples that I mentioned before, all of those examples feed into all of the aspects that have been discussed on this panel, and will enable us to build better payment products, but safely and securely. And I know, having been in the depths of the fintech ecosystem for the last however many years, that you do need to make sure you bring certain stakeholders along, but on other aspects, we need to also make sure that there's elements of competition and fairness as well.
Great, thank you, Adisa. Nigel, if I may ask you to contribute.
Sure. One thing I will push back on is that everybody's got a responsibility to keep clients' money safe. It's not just banks. We hold our money at the Bank of England without any banks ourselves. We hold it there. So it's the same thing. We've all got responsibility. And as an industry, we have a responsibility to keep clients safe. The thing that is concerning is all the best criminals have perfect identities. So they all have bank accounts at Barclays, with us, at NatWest, at Santander. All of them, we're all banking criminals because they've all got perfect identities. And that's one of the things we've got to figure out between us as an industry, is collaborate without, say, compromising competitive advantage, because we actually know where they come from and whose apps have been broken this week, but we need to be more open about it very clearly, and then use that data to track, because the key thing is also tracking the money, blocking the money and things, because I can't remember what the amount of push payment fraud that's gone through UK faster payments, but it's been a colossal number that we could have stopped if we collaborated. So I think we've got to sit down as an industry and respectfully work together, because new entrants have been said, you're useless, you're this and the other. We're actually quite good and things. One CEO of a bank say to me, because we're regulated, we can write better software. To which I responded, actually, my co-founder is a nuclear weapons officer on the submarines, and whoever wrote the Polaris, the software that runs Polaris missiles, whether you agree or disagree with Polaris, they know what they're doing, they're not regulated, if you see what I mean. So we've got to, I think, to Adiza's point, culturally come together to work respectfully to fight this financial crime, because we're doing it every single day. And as millions and billions been going through, London is one of the centres of, this is another just aspect, is everybody says it's all the offshore centres that are money laundering. London is probably one of the biggest centres of money laundering in the world. So we got to address that. And that's that we work together, anonymise data, have the machines sitting on top of it, looking for topologies that are going across all of us. Because the problem is, it'll be in Barclays, and maybe in RailsBank, maybe in HSBC, whatever. We don't solve the whack-a-mole problem. You knock it over here, and it pops up over here. And that's what I think, if we can figure that out, how we can do that and work with the security services, etc., in a way that we're not frightened to open the kimono and show things that where there's issues. We'll be a better place for the most important person as a consumer. And also we can drive a ton of costs out of our industry if we fix the financial crime issue. And then we solve part of the cost base of banking, because there's there's an allocation of cost which is to fight financial crime. We all wear it, we shouldn't. So that's my shout out to the industry, is let's see if we can figure out and work together in a collaborative way, in a cultural in the right way, and not have these sort of barriers, so I'm more important than you and all that stuff. You don't solve problems that way. You solve it by getting to the room, knocking your heads together to get a great outcome.
Excellent, thank you very much. So just to conclude the session today, I'll summarize in a few statements. Winning digital transformation battle, we do need to collaborate. and we need to work with each other. We need to start focusing on the customer needs and customer experience and map the rest of the Lego building blocks around that, rather than expect customer to picking and choosing and cherry picking. We do need to really collaborate to fight fraud and financial crime. And that's a cultural exercise as well as a technical exercise. And a few examples from the industry, from other sectors of industry, I would bring on collaboration and you know, back in history when the sectors cracked that challenge of interoperability. Emails is a great example, and telco hubs a great example. When they work on the standards that allow that consistency and interoperability, everything actually working better for the end users. Today, we're sending emails around the world without even thinking about it. I do still remember the time when the format of emails was different, depends on the countries and jurisdictions. On that, I would say, let's work together, and thank you, EPA, to bring us to this fantastic panel. Thank you for my very experienced and friendly panelists coming from different organizations. Some of them are competing, but for the sake of this hour today, we decided to collaborate and pass the message for the rest of the industry. Thank you all.
Thank you.